Welcome back to another video here on Financial Friends. Today, we're going to be discussing the dividend journey portfolio and if I should be, as well as if you should be adding Kroger or Pepsi to your portfolio. We're going to dive over the portfolio overview. We're then going to discuss Kroger versus Pepsi, which one I think that I might want to own, if either of them, and you can obviously take that information for yourself as which one you might want to buy. As always, this is never investment advice. I am simply your neighborhood financial friend giving you all the information to the friend group so you guys can take it and do what you want with it. Now, from here, you should definitely hit subscribe so you can see more videos like this. Hit the like button down below before we get into the video. And let's go ahead and dive into things. So, we have the portfolio here. I did make a couple of additions to the portfolio in terms of making some buys. We bought a couple dollars here of 3M. I had just my normal $5 to invest last week, and I did that. We can drop our average cost per share to $155.76. Of course, things get swung a lot when the position size is not very large, and with 3M, it's not quite that large. We also added a couple dollars here to Realty Income. We have 1.716 shares here with an average cost of $66.71. Now that things are updated, you can see our October income jumps a couple of cents. Annual income jumps a little bit as well. So, if you're now joining me, you skipped over this portion of the video, let's go ahead and dive in to Kroger versus Pepsi. I have been considering each of these two positions for probably the last couple of weeks. The Kroger news sparked some information in my head. I covered the Kroger merger with Albertsons in absolute depth this week, or in the video for This Week in Finance. So if you want to check that out, the link will be up above the top right-hand corner of the video. Check that out. It is a pretty interesting video. Now, the one thing you will take away from it is Kroger has some regulatory hurdles. That's, of course, one of the risks I'm kind of weighing here. Pepsi, of course, doesn't quite have those. And really, if you take a look at their past performance, Pepsi has been absolutely churning along. My three options here are either Kroger, Pepsi, or neither of them, and just build the portfolio. We have a good portfolio of companies here, and I think that I might want to build on top of these positions. I think I want to make these positions much, much larger in actual size, meaning actual dollar amount equity in the actual position. I think that that might be the smart thing to do, but I do want to dive into these for both your educational and entertainment value as well as mine. So, taking a look at Kroger and Pepsi over the last month, we can see that Pepsi is actually up 5%. Kroger is down 2%. I don't ever take past performance for future performance. This is normally just something I'm going to take a look at. I'm going to kind of digest this information with a grain of salt. Over the last 6 months, Kroger's down 22%, Pepsi's up 2.27%, and over the last year, they are actually both up, with Pepsi being up about 2% more than Kroger. So essentially what you could see here is a big spike in the price of Kroger stock, and then a decline all the way back down here to what is now up 9% on the year, and in the last 6 months, down 22%. And Pepsi has just pretty much stayed pretty steady. Pepsi is normally a pretty steady company. They've been climbing now, as I mentioned, over the last year, about 11.59%. So again, take that with a grain of salt. I just like to dive into that information to see where the stock has been, maybe get a little bit of a trend as to what it can do. Is it a growth stock? Is it a little bit more stable? Things like that. Now, what you're actually here for is diving into the dividend information. So you can see I have Kroger here, and I have Pepsi to the right. We're going to go ahead, we're going to look at each of these, kind of go back and forth. So if we take a detailed view of the dividend grade here on the dividend tracker, link down below for that. If you want to sign up, help support the channel, you can do so using the referral link. Kroger has a 76, and you can see here Pepsi has a 74. Reasons for that: we have the dividend payout ratio of 31% on Kroger, which I love to see, and a free cash flow payout ratio of 16.47%. Pepsi has 65% dividend payout ratio, meaning of their net income, they're paying out 65% of that. Kroger's paying out a mere 31%. Free cash flow to payout ratio, Pepsi's paying out 83%. Kroger's only paying out 16%. So Kroger gets flawless scores in both of those categories. Now, where it doesn't get a great score is net debt to EBITDA with 1.97. Pretty much the same here with Pepsi, 1.95. Now, Pepsi is obviously a dividend king, has paid dividends for a very long time. I think this is its 50th or 51st year increasing and paying its dividend. We don't necessarily have that with Kroger. Now, I did use another resource, dividend.com. They said that Kroger has increased it 15 years in a row. So take this number right here with a grain of salt. We can see, though, the dividend growth rate and the yield for Kroger is flawless. The dividend growth rate and yield for Pepsi, also in my book, relatively flawless. Current ratios suffer on each of these, with Kroger's being a bit worse, and earnings per share on Kroger, pretty good. Earnings per share on Pepsi, about the same. So you can see this is why they have very similar scores here from the dividend tracker. And really, I think that Kroger would have a much better score if they didn't have this 20. So in reality, I believe Kroger is technically winning out in this category. Now, taking a look at their overall summary, we're going to look at a few different things. We're going to take a look here at their outstanding shares. We want to see that decreasing over time, meaning they're buying back some of their shares and increasing the percentage of the company that you own. We want to see the revenue growing, and we're also going to take a little bit of a look at net margin because it analyzes some of the risk that we have with each of these positions. So here we are for Kroger. We're going to dive into theirs first. Outstanding shares have been decreasing at a really, really good rate ever since 2011, check mark. Revenue growth has been growing over the last 11 so years, check mark. Net margin. This is where we run a little bit of the risk. This is a very, very, very small net margin business. Very small. Grocery industry as a whole is. Pepsi, on the other hand, is not. We're seeing 11, 10, 9, 10, 10% net margins, 19% net margin in 2018, and then back to that sort of average, I would call it, at about 10%. Kroger's average really is about 1%, maybe 1.15% net margin. Revenue growth, a little bit more stable than Kroger's. We're going to have an explanation for that, of course, but that's what Pepsi does, stability and a very, very stable decline, albeit small decline, in the outstanding shares for Pepsi as well. So all check marks, really all across the board for the things that we're looking at here. Now, we can dive into some more advanced statistics. This is the sort of, and I don't mean to use this in a bad way, the surface level things I would be looking at to even decide if I should invest in a business. Pepsi is one that I have in the past, and I would again in the future. Kroger's one I'm going to need to take a little bit more of a look at if I want to make an investment, and it's for this reason. Kroger is taking that Albertsons merger. They're going to be taking on a ton of debt to finance that all-cash deal for Albertsons. Now, this means two things. One, an increased risk of a dividend either being stable or decreased so they can continue to service the debt they're taking on to purchase Albertsons. But it could also mean higher growth potential in the future. We've seen here that the revenue growth is really, really good, and basically doubling the amount of stores that they have across the country is going to do fantastic things for the revenue they're building in. Now, the question is, can that revenue then be turned into net income? They have very small margins, which means they don't have a lot of room for error. Can the scale that would be delivered with Albertsons increase that margin enough to where they are going to increase the amount of net income they're having, which they can then pay out dividends with, continue to keep that dividend either steady or increase it, and see growth of the actual business as well? So, really the question is this. Do I want to see that growth potential with Kroger? We could see that big spike here. It has that growth potential. Over the long term, not quite as much as Pepsi. Obviously, Pepsi, a little bit different of a story, but it has that growth potential. It's looking for that growth with Albertsons. It's in a competitive space, maybe not in the eyes of the government, but it's in a competitive space. Pretty small room for error as well because of the competition, because of big players like Target and Walmart, and because of the small actual net margin as well. So, do we want the growth? Do we want to own the actual grocery store, or do we want to own the products that go in the grocery store and sign up for a solid and stable dividend with Pepsi? Let me know down below in the comments what your selection for my portfolio would be. Here are the companies. We've obviously kind of already seen the screen. We've updated it. Let me know what you would pick for me. Let me know what you would consider picking for yourself. Always do your own research. Thank you for tuning into this week's episode of This Week in Finance. A new video out this Thursday. Hit subscribe if you're not already, and I will see you all in the next one. Take care.